Commercial real estate is in a massive situation where it could just simply collapse. The dominoes are already falling and things aren't looking so good. Many American cities have cut back on commercial office space, but you may not really care too much about commercial office space because you're probably not a commercial real estate tycoon, right? I'm not either. But guess what? You have a lot of small regional banks having huge loans in commercial real estate, and people keep saying there's going to be a crash, there's going to be a default, and it's been a while since we saw something like that. Last time we saw was some of the small regional banks getting hammered, but there's a reason why big investors don't want to do small regional banks. Because if you check out this Yahoo Finance article, mortgage investor JER files for bankruptcy, is the latest property firm to crash. This is something that should not be taken lightly. These are the type of scenarios that a lot of creditors want to avoid. JER Investors Trust, a mortgage REIT, filed for bankruptcy in the latest sign of distressed commercial real estate. The Real Estate Investment Trust, which also have several other partners and shareholders, are now owing a lot of money to creditors. Right now, some of its partners are down like $100 million. JER Investors manages a portfolio of mortgage-backed securities and other types of debt that are mostly tied to the commercial real estate market, according to the company's website. And of course, with interest rates this year hiking all the way up to the moon, yeah, you got commercial real estate just being more distressed than ever before. Look at places like the Bay Area, right? Commercial real estate properties are actually worthless. And I'm not talking about 10, 20, 30% off, which is already a humongous discount. We're talking about 50, 60, 70, 80% off in some cases. And seriously, we got whole entire towers selling for the cheap. If you check out, for example, the AON Center in Los Angeles, this is a very iconic tower that I'm sure everyone here has seen at least once, especially living in California. This is a massive, super tall story type skyscraper. Look how tall this is. It's humongous. And how much they sell it for? $145 million. Buildings like this typically sell for over 800, 900, sometimes even $1 billion. Per square feet, it's sold for about $130-ish. And compared to robust and very strong commercial office markets like Singapore, which are selling some of their top buildings per square footage for $2,500 per square foot, you obviously see about a 20 times difference between places like LA commercial real estate versus Singapore real estate in the commercial sector. And this shows you that the US commercial sector is absolutely getting hammered right now. And you already have in a mortgage investment group filed for bankruptcy. That is not great. And I don't want to talk bad about the US all the time, because it's not just the US, guys. We're also looking at places like Europe. Like, for example, this massive Austrian company here also specializes in a lot of malls and commercial real estate. Two key Cigna divisions filing for insolvency and a massive hit in the real estate empire. This is managed by Benco. Very humble beginnings. Started off very small, but eventually became a real estate tycoon. And like I say here, like a lot of these properties, it's not just in Europe, it's not just in the US, but around the world, many commercial office properties, except in very rare locations, many of these office properties are seriously worthless. Like, people just don't buy these buildings anymore. It used to be that offices are always in demand because it was like before like all Zoom and stuff like that, before the pandemic. Like, if you want to do a startup, you were in an office in the big city. That was like the go-to. But now everyone's doing Zoom. Everything's online and digitalized. Startups sometimes are all online. Sometimes employees from startups are all online. It's just like the norm now. And this is what's happening. This is absolutely taking out the commercial real estate sector. You know what's worse than these firms going bankrupt? But also, we're allocating a lot of resources and loans into construction for more office buildings, which really just doesn't make any sense. And this is why you have the rise of Muddy Waters, shorting guys like Blackstone Mortgage Trust. Essentially, Muddy Waters is an infamous short, corporation or hedge fund on Wall Street, and now they're shorting another mortgage trust REIT, which specializes in commercial real estate. Look at this, guys. JER, same exact department as guys like, the Blackstone Mortgage Trust. And Muddy Waters is most likely winning this bet. And then you have things like the WeWork bankruptcy, which kind of shows you that the commercial real estate sector is already getting massively plummeted. It's getting beat by every front. And then the WeWork bankruptcy, a massive $18 billion, which, guess what? Surprise, commercial real estate. So you have all these scenarios, which is adding up. It's becoming more scary than ever before. When people tell you about a commercial property crash, don't laugh. It's already starting. So thanks for watching, guys. Comment below, and before we leave, check out the private Discord server, guys. Patreon link below for some amazing trades. 7-day free trial. We already have 100, 200-ish members on here. We trade live every single day. Lots of winning options, and we actually win. We have like tutorial videos as well, guides. It's a great server. I personally use it as well. So check us out.